All right, let's turn to one of the morning big pre-market movers. Shares of Under Armour under quite a bit of pressure this morning, right now down by about 13% after the company forecast a drop in North American revenue for 2020 and warned of a negative impact from the coronavirus. Joining us right now to talk about Under Armour's results and forecast is Brian Nagel. He's Oppenheimer and Company's senior equity research analyst. And Brian, lots of people that I've talked to have said that they expected some negative surprises here, but what really caught people off guard? Why is that stock down 13%?
Oh, good morning, Becky. Look, as I look through the Under Armour report today, I think the big message, and I think why the stock is down, like you said, 13%, is that what Under Armour is saying is that the repositioning or the strategic repositioning that we've been talking about now for the last couple of years is not over. And frankly, potentially even moving into a more aggressive phase now under a new CEO. And it doesn't surprise me. I know I've been on your show a bit, and we've talked about Under Armour. In my mind, what's happening here is Under Armour is attempting to reposition its brand against a much stronger Nike, a much stronger and much wider dispersed now Lululemon. And I think we're seeing this in the Under Armour results.
One of the things they said this morning is they may not proceed with that flagship New York store. I guess that's the space on Fifth Avenue that used to be occupied by FAO Schwartz. That's going to cost them money not to do it. Again, you think this is the new CEO reassessing all of this and saying, wait, we can't do this?
Well, it's interesting. Look, that's if looking at their numbers. I know. So what I thought was interesting or even potentially odd in the release today is that the initial 2020 guidance was downbeat. And then in addition to that, not necessarily reflecting the guidance, they talked about these other strategic investments, one of which would not be opening that flagship store. But if I'm understanding this correctly, that the flagship store was $225 to $250 million, which is expensive. That's a lot of money. So they're probably saying, look, if our brand isn't where it needs to be, it probably does not make much sense, at least now, to invest that kind of money in a brand building effort.
What do you do with the stock today if they are putting off what they're going to be telling you in terms of the restructuring, in terms of what needs to happen? Would you buy the stock on a dip like this, or do you really need to see a lot more of what the plan is?
I stay on the sidelines. And look, as I talk to our clients, there's been a decent amount of optimism out there lately that Under Armour is turning around. Again, we're hearing today they're not. And I think that optimism needs to get out of the stock before it could potentially become attractive. But look, I think the ways to play this space are Nike and Lululemon.
And in terms of what you think Under Armour is worth at this point, it's $17.80 right now.
It's hard to say because, look, if you try to value it on an earnings basis, we're looking at next year, and it's obviously a very depressed number, but something called 15 cents of earnings. It's hard to value the stock off that. But if that's at all reflective of even the nearer term earnings power of the company, the stock could go lower from here.